Hello everyone and welcome back to another video. So today we're going to be analyzing or looking into technical analysis. So in the previous video we talked about fundamental analysis, where we basically just look at the fundamentals of a company. We see what's going on inside the company, we look for future growth potential, we analyze the internal mechanisms of the company, the finances of the company, but one common denominator in everything that we did in fundamental analysis was the fact that we explicitly focused on the company itself. We're going to basically be shifting our horizons a little bit in technical analysis in the sense that instead of looking particularly at the company, we're going to be looking at the buyers and sellers of the company's stock within technical analysis. So we're going to be focusing on the price movement in the market in an attempt to analyze the activity within the market by looking at the buyers and the sellers. So let's get started. So a key thing in technical analysis is a concept known as price action. So price action is basically the usage of previous prices or previous trends to predict the future trends. So we look at trends that have already happened and gain some information and look for common signals or common patterns in the previous trends, and then hopefully use to predict future trends off of that. Or we see how a current trend is going to how a current trend is going to be impacted or play out in the future. So price action uses trends to look at important points. We look at three key things. Usually we look at support, resistance, and breakouts. So I'm going to be explaining support, resistance, and breakouts in the next slide because I think the best way to do so is visually. But just note that in conjunction with price action, we can use indicators, which are basically these helper calculations or helper charts and graphs to help judge whether or not you should buy into a stock. We can use things like exponential moving average or EMA, RSI or relative strength index, or MACD or moving average convergence divergence. So I won't be going into the technicalities that govern these specific indicators. Just to note, there are many indicators out there, hundreds for that matter, and these are just a few of the specific indicators or that are really common and really popular. So just for example, RSI has to deal with the number of buyers and sellers within a market. So you can help use RSI in conjunction with the price action to make a judgment about whether or not you can buy or sell and to help predict future trends. So indicators are basically just helper methods or helper mechanisms that we use in conjunction with our price action. So let's get started with the key elements of price action. We use, which basically governs the entirety of technical analysis. So we use support, resistance, and breakouts. So what is support? Support refers to a price level that tends to support the price. That means that let's say we have some kind of trend going on. The support is usually an area where the price can consolidate and basically recover after a specific trend. So let's say I have a downtrend. So if you look at the x-axis of this chart, this is a crude oil chart, by the way. It's from November 2018 all the way to the present, which is November 2020. So in this crude oil chart, we can see that for the majority of 2019, whenever we'd have a downtrend in oil prices, for example, right over here, we saw oil falling. We saw oil falling once again over here, over here. Whenever we see oil falling in 2019, it tends to fall, but then the downward trend runs out of steam, or it just kind of just starts to tether away, and it just starts to fizzle out around this $50 price region. So this $50 price region is what we call the support level because it's supporting the price at that level. On the contrary, we also have the resistance level, which is a price level that resists upward price growth. So in crude oil, in this chart over here, the resistance level would be at the $66 level because whenever the price has trended up, we can see that it tends to lose steam or it just tends to consolidate and it's unable to break this $66 level. The support and resistance levels are just these regions of price that are not usually broken and they tend to either support a downtrend by helping to put an end to it, that's what support is, or they resist an uptrend. And finally, I want to talk about a breakout. So a breakout is basically whenever a support or resistance is broken. So as you can see, uh, in March 2020, or just early 2020 for that matter, wherever this circled region lies, we can see that the price went through the support level. So this is uncommon. This hasn't happened in over a year. So as an investor, you might be tempted to find out why. Why are the sellers all of a sudden interested in selling short on the stock? Or why are people just selling the stock in general? That led to this breakout through the support level. So that you probably, as an investor, you probably have to answer that question. And then knowing that the previous trend was that the support level was at $50, you know that this previous trend just ended. So you probably would expect the downtrend to continue. So a good idea would be to figure out what's going on here. You notice that the previous trend, which is the price consolidates at this support level at $50, has ended. So all of a sudden we're in a new trend, and the new trend would be the current trend at that given moment in time. In that moment in time, that would be a downtrend. So you'd probably want to sell short here, and as you can see, you would get rewarded. And yeah, that's basically how it goes. So here's some useful resources to do technical analysis in order to analyze charts like the one shown previously. This chart is actually from a website called tradingview.com. You can also use barchart.com. As for news resources, you can use MarketWatch, Investopedia, Reuters, CNBC, and there's many more. But it's good to do your research on what's going on. And finally, I want to talk about technical analysis versus fundamental analysis. So which one should you use? In reality, no one style is better than the other because their usage and their usage contexts are different. So both should be used together and their combination leads to the most success. And is one better than the other? Well, that really depends on your investment objective. Technical analysis is better for short-term investing, such as day or swing trading, whereas fundamental analysis is better for long-term investing. And why is that? Let's say I buy a stock and I want to sell it in like maybe 1 or 2 days. In 1 or 2 days, the fundamentals of the company won't really change that much. It's unlikely that the revenue will suddenly go to zero overnight or anything like that. So you know for a fact that the fundamentals of the company will not change. On the contrary, the technicals, which would consist maybe of the previous few days of price action, they could be more useful in figuring out what's going to happen over the next few days. So that's why technical analysis is better for short-term investing. Whereas fundamental analysis is better for long-term investing. If you can figure out what's going on in the company in the past and you anticipate on buying a particular stock for the long term, and you can basically do your fundamental analysis, you can see whether or not there's growth potential, you can calculate the intrinsic value, you can see the level of over or undervaluation, which once again isn't the only thing that you should use in reference to whether or not you should buy and sell. You can use all these different aspects of fundamental analysis to figure out whether or not the company can grow and whether or not you're paying a fair price for it. And then after that, you can decide to make a transaction and hopefully profit off of it. So technical and fundamental investing have their different strategies and their different properties and qualities, but ultimately no one style is better than the other because their objectives are different. Uh, in an ideal world, you'd want to use both of these in conjunction with each other so that their combination leads to the most success. I hope that this video is informative and educational for you guys, and thank you so much for watching.